What's going on? Chris here, and I'm going to expand upon just kind of the narratives that were out there. So there was the soft landing scenario, and then later in the timeline came the hard landing scenario, and then later the most nearest to date came the no landing scenario. And using the logic, the objectiveness of just technical analysis that gets made fun of by a lot of fundamental investors, we're actually going to use a way to just discern which is the highest probability. And then we get to laugh at the fundamental investors for their just lack of savviness. So, no landing scenario. No landing scenario would be if we were to break this bullish order block. So bearish order block. So the bullish one is at support at the lows here. And then this bearish one is at resistance at the highs. It's a little hard to discern that if you're not used to this, but the smaller one is the bearish order block. Because we broke the bullish one, there's a higher probability that the reversal is going to continue. Now, the no landing scenario would work if we break this 12-hour bearish order block to the upside, retest and resume. And the higher it goes, the higher closes it makes, the more likely it would be a no landing scenario, especially if we close the week above there. If we close the week above 41.36, then I would say, hey, yeah, we're in a no landing scenario. But the thing is, if there are no certainties, there are only probabilities, and I just pick the highest probability when I make my videos. I don't, it sounds like I'm really certain, but the thing is, I don't know what's gonna really happen. I didn't know that we were gonna close the week above the. I didn't know we were going to close the week here above the trap and above weekly resistance. I'm trying to find this line. Oh jeez, it's so thick. I mean, this was weekly resistance. I had no idea we were going to close the week above it. We didn't. I mean, I'm pointing to it right there. There's the close, the weekly close. So I didn't know that was going to happen, but this event. It was really hard to predict, and we just had probabilities that we could go off of, and we have to wait. We have to wait until we can get more certain of just the overall impression of what we think is going to happen. So there are no certainties. There's only probabilities, and now the probabilities of just a hard landing have increased dramatically. I would say it's gotten close to like 70 to 80%. Soft landing. Is if we hold this low. But the thing is, it doesn't seem like... So for one, we want to be positioned for bearishness. Because if we come up into here for a retest, risk to reward, the risk is technically from here to here. So it's only 4%. I mean, if we were to even do it from like the daily, it'd be somewhere... it would be... roughly here, like 3.49. So it's not that much risk comparatively to the bulls. So if we were to long here, we would have bigger risk. We would all the way from the lows around almost 6% risk. So what would you rather have? 3% risk or 6% risk? So that's why it makes sense to go bearish around here, because the math just works better, risk to reward. So the risk is smaller, and then also the reward is better for being bearish. So that kind of dispels a little bit. But we are in a no man's land. No, it could be a bear trap. This channel has worked as a bear trap right here. It's worked as a bear trap here, 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 here. But it's also worked as a bull trap. Here, bull, bear trap. So that's kind of why like right now, we're kind of Schrodinger's cat. Anything's possible. But at the same time, it's easy to define the risk. If we close the week below this thick line, if we close the week above this line, then we know who's right. The bulls are right if we close above this line. It's still relevant right now because this is like the head and shoulders or deviation, left shoulder, right shoulder, like whatever you want to pick. And then we got to wait till we test both sides. Once we test both sides, we will get a confirmation of where we close, of what side is correct. So, to make it simple, the soft landing is in play if we do not close below 38.34 spot 2 on the weekly closing basis. So if we close the week above 38.34 spot 2, with every single week, we will increase in confidence that it's a soft landing. I was under the impression that if we closed the week above that wick high, it's the previous month's high, if we closed above that high, it would be more likely for a soft landing. But the thing is, that thing's gone. If you want to see the chart, here's the wick that was responsible for that previous month's high. We'll put it, or maybe it was this one. It really doesn't matter because it's wicked so far below. Like, we could choose that one. Let's look at it really quick. 41.41, roughly 41.41. I think we're just better off with the week. Yeah, it's for this one. It's this wick. I mean, whatever. It could be this wick, it could be this wick, but we know that it's sold off. And it's pretty clear the close of that week was below it. It was below that, and it just kept on going down. So that soft landing scenario, you don't see that orange box anymore down here. It's gone. So it's harder for me to believe that this soft landing is coming. But I will give you that we have support here, and until we get a close below this, sweeping these lows, it's not invalidated yet. So that's what I will say. But it's looking increasingly more appetizing for bears the better risk to reward setups we get. Here would be a good risk to reward setup, and going all the way up here, 3% risk. It's not bad. It's a really good compared to the bulls. The more setups we get like that, the better. The more it's going to be beneficial to the bear side. And so that's kind of just my case on the no landing scenario. Is if we closed above here, it's still possible. It's just harder to believe because now the bears are there. And we just broke a 12-hour market structure. And the bears are definitely here. So it's got to work really hard. It's got to work really hard to close above all that. So no landing scenario it's almost like 0% until we have a change of just what we see. If we don't see any objective numbers of just something objective that says like, hey, yeah, no landing scenario is highly probable, then we'll make note of it. Right now, it's not even on the radar because it's so improbable. Until that market structure breaks to the upside, it's improbable. It's below 3%. Soft landing scenario, you could still give it a 50-50. But the thing is, fundamental-wise, if we look at fundamental-wise or just association-wise, association with the US dollar being strong, on an uptrend, being held by a bullish order block, broke to the upside, retested, and a sign of strength to the upside, and a break of the euro, which is associated with risk on, a currency associated with risk on. US dollar is a safe haven currency. Japanese yen is a safe haven currency. So we still got this as a question mark. We would need to break to the upside to show the strength of safe haven currencies. And then, of course, gold is the other safe haven currency, but we're not looking at that right now. We're just looking at the Japanese yen, the US dollar, and the euro, and we'll get a really good idea. And the VIX has broken out. It's doing a strong retest, and it's held support. So that's a sign of strength. All we need to do is take new highs, and it's totally coming. And all we have to do is close the week above here. Then it really is obvious. Like if we close the week above, then we break the weekly market structure. It's really hard to argue against. But most people, they will wait until it closes at a significant level. But by then, you miss the trade. That's kind of what I say. If you're the 12-hour is significant enough. But I will say, with the yen being broken to the downside, it still hasn't won over everybody. Hasn't won over everybody yet, and it explains why with this break that we have, we could still pump into it. I still believe we're going to pump into it. Where we're going to close, I have no idea. It really depends on the time frame, price and time. Open, high, low, close. And we need time, we need patience, and once it's certain, and each time the probability will increase. That's why I like weekly closes. That's why I like 12-hour closes, because it increases the certainty of the probability that a certain outcome is going to happen. And it's basically under the assumption that there's information in price, in market structure. And I agree with that. It's not necessarily the most logical thing, but it's still a good way to objectively look at things. So, soft landing scenario will be invalidated. We'll get rid of this. We don't need it. If we close the week below 38.34 spot 2. I will be saying we're near a bull trap if we come into this price. It really depends on the speed and the amount of force that we bust through that level, or if we just gently tap it and we start resting. So obviously the risk to reward is better for the bulls if we come over here. And then because I don't know who's going to win, but fundamentally I'm bearish. If you look at the dollar, the inverted treasury bonds, the Eurodollar futures, the reverse repo, which is the view from the lender, it all looks risk off. If you look at the MOVE index or whatever, all the things that are hedging against risk and seeking flight to safety, that's kind of just why you want to be bearish. You want to look for bearish things like setups. It's because that's kind of just the game. The game is having the smallest risk with the biggest reward. That's the thing. If you're a good risk manager, that's what you look for. You don't make up your own rules. You don't chase after a narrative. You logically play the math so it works in your favor. But that's the three scenarios, and the hard landing is got the best reward for the lowest risk right now. Right now, once we pump into here, the hard landing scenario, we just don't know the probability. But the probability drastically increases once we blow through the level of 38.34, spot 2. It increases dramatically to 80, 90%. I'm bracketing because this is just a number. It's no real objective number. I'm just saying, for me, in my confidence level, that's what it would be at in terms of the market structure, because we broke the market structure. We broke that support that's held for one candle, for two candles, for three candles, is now gone and capitulated. That's kind of what it's saying to me if we were to close underneath 38.34 spot 2. So that hopefully gives you some context of those three narratives. And it shows just my openness to the bullish side It's just the bullish side has to prove itself. I'm not going to let it have its way with me just because that's how I think, that I'm so infatuated with a certain side. I want the best reward and the smallest risk. Or it could just be dominant smallest risk. And right now, the smallest risk is for the bears. So that's pretty much it. Thanks for watching. See you in the next video.